Welcome to the Capital Spreads weekly update. Today's Thursday, the 23rd of February 2012. And the week so far, well, I suppose the biggest news of the week has to be the fact that Greece has finally agreed to a bailout towards the end of last week. Despite having received a bailout, many people are still very cautious in terms of whether this is actually truly a turning point for Greece and the Eurozone area as a whole. It has to be kept in mind that even if Greece's problems do finally seem to have turned, there still remain a number of Eurozone countries that still have their own issues and own problems, and it could very well be a case of the spotlight turning on those countries and ignoring Greece going forward. Just this morning, for example, we also had massive write-downs from a number of European banks, for example Dexia and Crédit Agricole, as well as the UK bank, Royal Bank of Scotland, in relation to their holdings of Greek debt, which was again written down just recently in accordance with the agreement that the deal that the Greeks struck. Now, there's a worry that there are other banks that also continue to hold other very bad debt, which hasn't currently been announced or realised, and could come out in the coming quarters. The markets on the whole seem to be trading in a very much sideways pattern at the moment. Volatility seems to have died, and there seems to be a mood of wait and see before it wonders whether it wants to continue going higher from here or retrace. The FTSE at the moment is trading around 59.11. It's down about 4 points in the day. As I mentioned in a number of my posts before, it finds 6,000 very hard level both to reach as well as to break through. It tried reaching that quite recently, however, it continued. It once again retraced back off that, and as I mentioned, we're trading on 59.11 as a result of that. The trend at the moment still continues to remain up, and not only that, it continues to sit above the 200-day moving average, which both continue to provide support for the FTSE. However, when you compare, for example, the US indices, which have reached multi-year highs, and the fact that both the UK FTSE and the German DAX haven't reached the highs they reached back in 2011, it highlights quite starkly the difference in the economic and equity outlooks for both the United States and Europe. Europe continues to be lagging and struggling, whereas it looks like the United States seems to have turned a corner. Oil also has become quite topical again for reasons related to Iran. We had, for example, news out Iran just very recently that they're going to stop providing oil to a number of European countries, as well as France and the United Kingdom. We also expect further sanctions to be imposed on Iran in the coming weeks, which will further heighten tensions. Now, there is a worry that Iran could follow through with its threat of blocking the Straits of Hormuz, through which you get at least 25% of the world's oil going through. Now, if that happens, you could certainly see oil spiking even higher than the moves up we've had recently. Brent, for example, broke through the 120 level recently, which acted very much as the top of a range, and it certainly looks like it could go higher from here. There was a report by the IMF, for example, which said that oil could move at least 20 to 30% higher from where we are at the moment. So based on those estimates, you could possibly see oil going, Brent, for example, going up to about 160, 170, and US crude going up to about 130, maybe even 140. The bottom line of all this very much is everything will become a lot more expensive as everything is transported around the world, and you'll find your cars a lot more difficult and more expensive to drive. Gold too also has become very topical recently for other reasons. The two key reasons seem to be there were rumours and speculation going around that the United States might introduce further quantitative easing, which would further weaken the US dollar. Now, if you had that, you'd get rebalancing with gold strengthening as a result. You've also had rumours going around that there were algorithmic proprietary trades going around which helped push up and spike up the price of gold over the last few days or so. However, nothing's been confirmed on either of those fronts at the moment. The trend certainly seems to be up in gold at the moment. In the short term, you could possibly see another retest of the 1800 level, and even a test back up to around the 1920 levels, which was the all-time high in gold, if you continue to get the uncertainty and speculation both related to the United States as well as Iran. As I mentioned in one of my previous posts before, if you look at gold on an inflation adjusted basis, it's previously hit an all-time high of around $2,400, which was back in the late 1970s, early 1980s, and many analysts are still forecasting that to be a possible long-term target. In terms of the week going forward, there aren't many figures of the next week or so that will have a large impact in terms of economic figures, that is. However, there are a number of figures that you could possibly keep an eye on when trading. The first is you've got UK GDP and US new home sales coming out tomorrow, And next Tuesday you have both the Eurozone consumer confidence as well as the US durable goods. Those are coming next week. However, it looks like the focus seems to be very much on the political ongoings at the moment, both in the Eurozone as well as Greece. In terms of client activity, many of our clients have shorted the rallies we've had recently in the equity markets. So they are short, for example, the US indices, the FTSE and DAX. Most recently, they sold out of the gold position and went short. However, they've actually just reversed that again and now have gone back into long-term holding in gold, which is long. The same also applies to silver. And just very recently, they've started to sell quite heavily into the oil markets, believing that we have possibly hit a high in oil and could see a possible retracement from here. In terms of the theme of the week, I would say the theme of the week would very much be the cautious optimism that the market seems to be giving at the moment to the ongoing developments, both political as well as economic. The equity markets on the whole you have to remember have been moving higher over the last 2 months or so. The US, as I mentioned, has hit multi-year highs, and the FTSE and the DAX are trying to hit the highs they hit in 2011. However, that has to be kept in perspective when you consider that there are other ongoing political problems and economic problems that still haven't been resolved, and there doesn't seem to be any resolution forthcoming. That's it for now. As usual, it's media@capitalspreads.com if you have any feedback.